Hello guys, it's Chris from the tradingexchange.co.uk, and we're going to take a look at a market outlook for the week beginning the 18th of January 2016. Okay, so this is mainly for the forex pairs, a few indices and some commodities as well. It's for spread betting these markets. And trading financial markets is risky. It involves the risk of losing all of our invested money. We don't provide any financial advice here, so please use any of this information for education purposes only and entirely at your own risk. And let's go and have a look at the markets then. All right, here we go. So we're starting off with the euro dollar here, popular pair to trade, and there's going to be some volatility on this particular pair this week, certainly on Thursday. We're Tuesday the 19th now. So Thursday the 21st, we have the ECB rate decision. Now, it's expected that Draghi's going to express a patient view at this meeting on Thursday. He's got to balance all the views of the Doves and the Hawks on his team, who have all received information that strengthen their own cases for the need for either more or no more easing. The minutes from the December meeting revealed that should the ECB ease again, a deposit rate cut might be preferred. And, of course, a deposit rate cut at the meeting in March is already priced in with about 50% probability. And that's pretty aggressive, I think. So given that the market's already priced in a relatively high probability of additional rate cuts, the meeting on Thursday could be a disappointment if Draghi doesn't point to further rate cuts. So what would happen? If we're right and ECB disappoints this week by not being willing to signal the need for another deposit rate cut, then the euro crosses are going to see some support. And so, we're going to be looking for a test of 110, which is going to be this first line here. And that's going to be the upper bound of this range that we've been in since December. So we've been moving sideways. It's been a pretty boring pair to trade, but, range traders have done particularly well. Shorting at the top, buying at the bottom, and just playing the bouncing. A test of 110. If we take out 110, we've still got some resistance above us at 110.5, but of course a break above 110.5 is really quite key because that can take us up to test 113 again. Maybe even higher, as high as 115, which would be a fantastic 500 or 400 point move. Okay, to the downside, of course, if we do get the indication that more easing is going to be happening, the rate cuts are going to happen, and he's just going to widen, if you like, the underlying QE theme, then of course we're going to be looking to test these lows. And 108 is the key level at the moment. A break below that, looking to retest this 107.10 level, and a break below that opens up the door for another test of 105. Okay. So let's look at the cable then. So the cable, the pound dollar, again, massive bearish trend. You could take this particular chart to a child at school and say, which direction is this moving? And they'll tell you it's down. It's pretty clear to see. And so anybody who's been shorting this has done very, very well. A good strategy for this particular pair, and has been since mid-December, would be selling spikes, if you like, or selling into the rips. And a way that you could do that would be to use an RSI. So you would just take an RSI, let's just insert one here. A really basic, crude one, just the usual standard settings. And you just simply find that whenever you get these spikes on the RSI, you would sell them. So you'd be looking to sell, for example, at that point. You would then look to sell at that point, then at this point, at this point, at this point. So whenever you get these little spikes that have been confirmed, you would look to short on them. Of course, there is an EA, which we have on the tradingexchange.co.uk, which is an RSI-based EA, expert advisor, an automatic trader that would simply do that for you. You just provide the settings that you want it to short, to sell the rips, basically, and it would automatically do that for you. For more information, check out the descriptions in the bottom of this video. Okay, so on this particular pair, we are really overcooked. we've carved out a low at 142.5, somewhere around there, and we're around about halfway inside this trend channel at the moment. I'm thinking that with the soft data that came out from the US on Friday, there's an opportunity for this one to provide a bit of relief, take a short bounce, and I would be looking, if I was to trade this particular market, for aiming for around about 144 to consider a short, which would be the underside of some previous support, the top of this trend channel, and it will allow things like the RSI to create a spike to utilize that strategy which we just mentioned. Okay, so fundamentally I think that the pound is weak. No one really wants to buy the pound at the moment, not until Mark Carney and the team decide to really provide some more hawkish tones for their monetary policy expectations. So I'll be looking out for 144. We're bearish below probably 145, so good opportunities to short will probably still be coming up over the next couple of weeks. Okay, the dollar yen has been following a similar trajectory, bearish trajectory, all throughout December and January. Again, this particular pair has been following the stock markets, and it's a good one for correlational reasons to kind of get some indications as to what it's going to do on the markets, stock markets. We're bearish below, well, there's a number of different really levels to look at. So the first one I think would be probably around about here, 118.32. Bearish below that certainly, and but the main trend defining level in my opinion is going to be around about 118.8. So if we stay below 118.8, and there's still opportunities to short the market, I think. With lows at 116.5, we have looked to try to test this August collapse here, and there's a possibility that this might still be retested, and close to 116 is reached. And you'll notice as well, of course, that that 118.32 was around about this underside of the support up here. So again, could be an opportunity to take a short position from there with half decent risk reward setups. Okay, a pair that I've been looking at, looking to trade actually recently would be this Aussie dollar. Now, I got in earlier on today, in fact, before I started this video, and got out, decided to wait for a better price to short from. But we have been, well, I mean, this pair's collapsed over the last 12 months or so, or even longer, maybe. And we've now reached a new low below the 69. And my thoughts were that if we do take out 69, then I'll be looking for it to retest it, maybe test the underside of here before we go short. So it's approaching round about where I was looking at to get in, which was 69.5. So we'll see, we'll see how that plays out this week. We're bearish below 70.77. Lots of sevens in there. Or 70.775 that I've got here, the line. And providing we stay below that, I think there's opportunities to continue to head lower towards 68. Let's take a look at the DAX. One of my favourite pairs. I run www.daxtrader.co.uk, and so I look at this market every single day. And it can be a difficult market to trade every now and then. So we started a first shoulder, if you like, if you can call it that, back in August, beginning of September time. And then late September, early October, we had the major low at 93. And we have now started to test those levels. And we've got a very basic crude trend channel here that we've drawn, which we're approaching the bottom of. And it looks like it wants to relieve some of that. We've reached 97, 200-point gap specifically this morning after a really boring coil day yesterday, where it just traded sideways and just gradually got smaller and smaller and smaller. The moves got smaller and smaller and smaller. So I think bearish. We're certainly bearish below last week's low. last week's high, should I say, which was this line here, which is almost a perfect shorting opportunity actually, as it touched the underside of this support level here from mid-December. If you draw a retracement of this entire move to the lows of yesterday, a 50% level, you're probably looking at around about a retracement of 98. Somewhere around there could provide an opportunity to short with a stop above maybe this level here, just below 10,000. Could be an opportunity to do that. But of course, if you want to take a longer swing position, then taking along from current levels to aim for around the 10,000 or higher is also an option. Slightly less attractive now. We've had a 200-point move this morning, but there is still an opportunity if you are bullish. FTSE, I don't tend to trade the FTSE. It has been trading sideways for quite a while. It's been very boring. It has broken below some pretty significant support recently, and it's within this kind of choppy area here between 58.79 and 57.50. If we break below 57.50, then the FTSE's in trouble, and there's an opportunity again to short from that. There are probably plenty of people that have limit orders around about 57.25. I think a break above 6,000 can take us up to retest some of these highs up here, but we are definitely bearish and currently testing previous support at current levels. So if you are bearish on this market, there is an opportunity to be short. The FTSE is a difficult one because of the types of companies that make it up, and what's happening with oil and things like that at the moment is certainly having a pull on the FTSE. But I think that they're probably easier markets to trade than this one at the moment if you're looking for bigger moves. S&P 500, so this is having quite a lot of a pull on the European indices, certainly, and again it's bearish heavily. We broke above some major support at 2,000, and since then we've been pretty much in free fall, bottoming out at just above 1850 recently. If we stay below 1950, then we're definitely bearish. There's a potential shorting opportunity coming up at around about 1920 with a stop above this high here at 1935 or so. And of course a break below 1850 can take us much, much lower. If we get continued dollar strength, then it would support the case that we're going to be going below this. But yeah, if you take out 1870 and below, then we could be in free fall territory for a little while, down to this low here at 1820. Yeah. Definitely looks like it wants to go a little bit lower though, doesn't it? So it's just about finding the spots, because this market can move and chop people up quite quickly, and so there's quite a lot of volume traded on this market. So I think you want to wait for a clearer setup than what's out there right now. Okay, so we've got Brent crude oil. It's a market I actually haven't traded very much at all of 2015. I remember having a trade on in July 2014, where, believe it or not, I was long, and that was when we were at our pretty much all-time highs. Well, yeah, I think it was all-time high. So it was a pretty nasty market to trade, but we've broken below some key levels. This is UK oil, but you'll notice that we've broken below 30 even on this one, and looking to retest that. So I think we're bearish below 32, and it'll be interesting to see if we do break above this 31 level here. But there's an opportunity, if you're still bearish on this market, to short from closer to that level. Gold, final market to look at for today. Again, we're bearish and we're looking for a pullback, which we've been bearish since October really. This market chops people up probably more than any other market that I'm aware of, and so many fake breaks and false moves. But you could technically say that at the moment we are short-term bullish, and we're bullish above 1075. We're starting to form the basics of a trend with high highs and higher lows. And I think at the moment we're not quite in the sell zone to provide like a wider swing trade. But with stock markets and risk-off theme starting to dominate. The gold's generally quite a good opportunity to buy. So if you were bullish on this particular pair, then you could be going long from somewhere around current levels or lower, with a stop below 1070, looking to target somewhere like 1125. Excuse me. But at the same time, this is just a particular market that can be really difficult to predict. The moves can be quite big, quite vicious, and it can move against you almost in the blink of an eye. If I was going to be looking at this particular market, I would be looking to short from much higher levels, and somewhere around a 50 to 618 retracement of this wider swing from October. Somewhere in that zone, I would be looking to short it, as I believe that eventually we're going to get a bit of stabilisation in most of the markets that are currently pretty volatile. And that's it. So there's a couple of opportunities to trade out there. I think be careful for Thursday based on the European rate decisions, and just careful what kind of trades you keep on. You got the ZEV index that looks like it's actually just come out, which I believe was a pretty good number then, because the DAX has rallied from earlier on, but I haven't got the details to hand. Let's just have a look. Okay, so the ZEV has delivered 10.2 compared to expected 7.9, so that is bullish, I think, intraday now for the DAX, and I think we pretty much had most of our move today, so it's possibly not going to have quite as much of an impact as we expected, but really expect a slow down towards Thursday. So tomorrow probably going to slow down, it would be my thoughts, before this rate decision on Thursday. Wait for further bias based on the outcome of that meeting. Aussie dollar looks like an opportunity to maybe sell from slightly higher levels, and of course keep an eye on oil, because that seems to be dominating sentiment and risk trends at the moment. Best of luck trading for the rest of this week, and I'll be back again Monday for another video. Take care, guys.